Good afternoon and welcome to the end of the review for today. And today is April 2nd, 2024. And it's the second day, trading day of this week. And keep in mind that this week we doesn't have anything really a high impact or medium impact news, just low impact news. Maybe tomorrow Jerome Powell is a Fed chair speak, so that maybe have some impact right there. Other than that, we not expect any huge news. And if we look at the week, we are in the week 14. The very first week of this quarter or this month also. Want to see how it's play out. And then for the option expiration, not much going on for the week 14, the first week of April, the first week of the second quarter. For the CPI data release, we're looking for next Tuesday, April 10th. Excuse us, we misspoke, is next Wednesday. So let's see how this Friday, how this week is gonna set up the liquidity for next CPI run right there. That's very interesting to watch. And then for the Fed meeting, we don't have any Fed meeting until the end of this month. So it's going to be April 1st. It gives us May 1st, April 30, May 1st, which is the very first week. Right? It's right here is overlap between the first 2 days still in April, but the last 2 days of that week it fall into May, so go overlap right there. All right, and then we're gonna see something. The GB, let's take a look real quick. The CPI data, not the GBI, but I believe we misspoke. It should be. Yeah, GBD data. We also look for the April 25th, which is the GDP data, because we see that on March 28th, we see a very interesting move. We believe that it has something to do with the following day, the data of GDP release. So let's look at March 27, and we can see. Look at the charts right now. March 27, right here, 27, right here, March 27. You see that? We see that there's something manipulate right here on the GDP data. And that it make a very interesting move. So we're going to pay attention on the day before. You see the day before, which is on 26. All right, let's look what is on 26. March 26, which is a Tuesday. So basically we have the Tuesday's manipulation right there as the week low. They manipulate right there. See that? All right, let's see. So basically we see the day before. The day before is a Tuesday. We see that the Monday is accumulation. And then we see that the Tuesday, the GDP data come out on Wednesday. So I think it's the last Wednesday of the month that we leave. So we see the manipulation takes place on Tuesday to take all the social liquidity, and then it's rally at the end of the Tuesday. So very strange, because the next day, very end of the Tuesday. Let's look at the calendar again. So 28. Let's look right here. So March 28th. March 28 right here. The GDP data released March 28. Then 27, which is a Wednesday. So right here, the Wednesday right here. The day right before the data release, which is on Thursday. So we see that Tuesday manipulates, and then on Wednesday is also do a manipulation before distribution right there. So basically, but it gives us a signal that it's gonna be moved up, but it at 10:50, yeah, around 9:50 or 10, it go down, feel a gap, and it rally from there. So give us some idea. So we pay attention to the Wednesday and Tuesday, how the liquidity was set up for Thursday, which is the GDP data release. Let's see, the GDP release on what days anyway? I mean, what time? What time? That's critical, right? GDP report 2024. See what time release? 8:30 or 9:30? Let's see. Yeah, they don't really give it a time. But anyway, you got the general idea why we also pay attention to the GDP data release as another high impact news, or another, the economic events that impact the movement of the market right there. All right, go into today. We see, the huge gap down, and we don't see huge gap down as this. We see that on Tuesday right there, right? We don't see. We look at the ICT model. We want to see any model that's gonna play out today, right? The very first model that is gonna open between the Friday range, either the PM or the whole day, but it did not happen today. Today it fall off the cliff, for lack of the better words, fall off the cliff. It out of the range. So we eliminate this model 1, and then we go to model 2. We don't see that neither. But if we flip this, it's gonna be it's not gonna be the same. So we don't see this. We don't see the Utah swing before the 9:30. But let's flip this chart. You see if we have a Judas swing low before 9:30 and take out a low. Let's see that the case. So right here, so do we have, no, we don't have. So the previous the previous day, right, where you need the Judas swing take down, which is from 5. Yeah, it might, yeah, it take out, but it's not is a really swing. So this that model is not neither Judas swing before 9:30. It do look like a Judas swing, but it not exactly before 9:30. Yeah. Take out a low, right? You want to take out a low. Yes, you have to take out a low. Yeah, it's a huge Judas swing. 9:30. Let's look again. The low. And then it start reverse at 9:30. So this case is not happen either. AM. So 2 to 5, which is lit level 2 to 5, not really swing at all. So this model may not apply for today. So basically we eliminate this model also. So model 211, let's say model 212, 212 we cannot, we also eliminate this model. We can look at the gap, it's right between the prior day range, right, previous day range right there. We eliminate that because the gap for today right here. So the gap is way out of the previous day low right there. So we're not gonna apply for that model neither. So we look for this model. Look to see if there any Judas swing at 1:30. They're gonna take swing, swing the bicycle from lunchtime hour from 12 to 1:30. We look at this model. That's the only model that we think we anticipate may happen. The rest is we already eliminate, which is the model 3.1 right there. So now let's look at the charts. Okay, so at the beginning we see the huge gap down. So the question for us is when the gap gonna fill, right? When the gap gonna fill. Now take a look. When the gap gonna fill. Look at the 1 hour. That's what we see. This is right before the open. Right here, 7, 9, which is include 9:30 right there. So we won't engage until 11 or 10:30 right there, because we see huge breakdown. We want this gap to be formed so we can engage right there. And you see that if we look on the low time frame, which is 5-minute time frame, our favorite time frame, right? At first we mark right here at this candle, the low, we see the breakout with favorite gap, and then we mark also this candle which is at 9:05. You see the fair gap right there. And then we see that the 9:30 it just retests this fair value gaps, and this is a bearish breaker fair value gap and a retest right there. So if we identify this setup in real time, we will take it. Basically, we put a sell stop, not sell stop, but with a sell limit right here. We put a sell limit order when it retests that one right there. And we just simply put the stop up at the high of this. So basically we reach around $3.16, and then we aim for this high time frame level right there, which is this level. So we're going right here. We know that the candle is the huge candle right there, so we aim right there on the 1 hour time frame. And also we see that on a 1 hour time frame, we see it's the first leg down, and then it's accumulation right here. Accumulation, the sell side liquidity, and boom, it make a second leg down. So we anticipate a reversal or over pullback right around here, but we don't know when. Yeah, we anticipate, but we don't know when and how that happened. And then the question for us when we go in, we're gonna see that it's gonna complete the second leg down. Then we go in at 9:30. We still have a chance to catch the move for the second leg down. Because if we look on the high time frame, give us that setup right there. So basically we have the first leg move is some people say is a measure move right there. So basically that's not the measure move. Exactly. Wow, look at that. Yeah, that's where the level right there. You see that level? Boom, breakdown level. It make exactly the second leg down. So we anticipate a second leg down going to finish, so we can cash on the short at 9:30. And on the low time frame, we see the gap right here. See that? It's the bearish breaker. And you see the fair value gap, and right before 9:30, 9:25 and 9:20 is a little bit pullback right here. Is for the smart money going short term, because it have a setup right here, bearish breaker, fair value gap, and this is just a retest. And right before 9:30, we have two beautiful and up close candle, which is it turned into a bearish order block right there. So if whoever short gonna pair with this liquidity, and that's exactly happened. And let's say we aim for this target, then let's see what do we have right here. So basically, hold on, we want it to be on the right. All right, it's okay. It's all right. Yes. We just want to get. We just want to get the residual ratio. So, 1-to-5 residual ratio right there. So basically we put a limit order at this breakout level right there, and this is just above the weekly level right there. You see it break out the weekly level, surely it's gonna retest that before going down. And exactly on high time frame we have a weekly weekly level. On low time frame we have a setup which is a bearish breakout fair gap retest, and the time is alignment at 9:30 right there. Let's look at the weekly. Where is our weekly? Right there. So here's our weekly. Right there, we mark this level. Definitely it's gonna test the level because this is a breakout level. We see up close, break that level, another bullish candle above that, and now to start this week it's a down close. It's surely gonna test that. So that is the level on the weekly. That's how we mark our level right there. And you see right before 9:30 it break that level with a huge fair gap, you see right there. So definitely it's gonna go back to that level and retest. But the signal to us is close right below. It's close right below the weekly level. So that's a bearish signal right there, and it just retests into a bearish breaker on low time frame, which is a 5-minute time frame right there. It just retest and then boom, it going down and hit target at 10 right there. So let's document this. So we backtest this setup. We do a lot of backtests that help to build our confidence and our model. So right here, that's the 10-10. When it hit the target, which is a high time frame target or our 1 hour time frame right there. 1 hour time frame at 52.35.75, which is right here. You see that level? And hold on, let's remove it because we anticipate the management move gonna happen. So that's the idea. We're gonna catch the short move right there, the sell off, which is this move. Reason why we choose this level on the 1 hour time frame, because whenever we see the gap and the level between the gap is the key level. That's our theory right there. So we see this level right there, it break through level with a gap. That means the algo is reset into a buy program right there. And you see that the last move, it tests that gap, but it closed above that. So that is a bullish signal for to go in, go long right there. And today it become the target for it right there. Yeah, a good target for the out move right there. That's how we pick that level right here at the target. So in this case, we can call it a real breakout, right? Real breakout to the outside. So it's a real breakout. It's a trend follower, right? Follow trend. It's very simple to keep it simple. We don't. Okay, it's a down move. And this is the 10. Okay, hope that we don't crowd it with the high time frame. It's hard to see, but we do the best we can. So let's see, we go in right here at 9:30. So basically on a high time frame, H1, we anticipate a second leg down and try to catch does move at 0930. That's on high time frame right there. So it's the second leg down. Now look at the low time frame. We have a setup. It's a real breakout. Good trend follower right there, and we have a beautiful setup and the time alignment right there. So it's a bearish breaker and fell up retest, very classic right there, and the time is alignment right there. So with a buy limit, very hard to do stop order at open because it's very volatile. There's a lot of volatility at open, so it's better to do the limit order. So basically we'll do limit order at 52, 54, 75, which is right here, right there. See that? Right above a weekly. We can do at a weekly or that's level also, right? Or 52, 53, 50. You see that? That's it's a weekly level. Then we put our stop loss just the high of this bearish breaker right there. So we reach about $3.16, and our reward gonna be $18.88, which is about 1-to-5 ratio right there. Yeah, 1-to-4. And our target is at 10 right there. So entry time is 0930 and exit time is 10:10, which the reward is 1-to-5. Beautiful, I have 5R right there, and it moved very fast. So basically about 40 minutes you have 5R, which is $18.88 or move a point right there. Beautiful setup. It happened every day, just trend follower in this case. All right, let's save this, and we say it's a real breakout. In this case, it's berry breaker, feather gap, retest, and entry time exactly 9:30. How beautiful is that? Save it. That's the first setup. Let's see what is the other setup. We did have some other setup that we document, right? All right, one of the setup that we checked right here. So basically idea right here, we identify right there in the real time we see, by the way, yesterday and today we don't take any real trades. We kind of try to slow down a little bit so we have time to learn. So we kind of take it slow right now. We just do back testings. So we identify as soon as the low we're making, you see that this breakout level right here, or point of entry level, it break the level, it fell the gap. So, and it create a new low. As soon as it create the gap down, it create a gap up right away. So that is a balance price range right there, which is fit into this. You have it right there. Balance price range right there. It fit exactly this way there. And now we have to do one more thing to make it more reliable or high probability. We time them, right? And it's about right. It's about at is near on the hour, which is about on half an hour, we have 10:30 right there. So basically 10:10 right there, and this form exactly near on the hour, which is on half an hour with 10:30 right there. And we see the retest right here at 11. So it is the retest at 11. So we can go long at 11 when it fall into the balance price range right here. And the beautiful thing right here, you see the candle right here, it get rejected at this. This is another breakout level, but it is the last breakout because there's no failure gap after that. You see this level, it break out with a failure gap. This guy break out no failure gap. That means this one the last bearish breaker. It's gonna become a bullish order block. That means this setup balance price range retest right there. We can reverse or rephrase them to another setup. It called order block, failure gap, retest, and we can enter exactly at 11, which is on the hour. So pay attention to on the hour and on the half hour, where the entry is gonna be time alignment with the price right there. So again, you see this candle, it reject that level. That means this level become a support level, so we can put our buy stop here. If it break the level, it will carry us into the trade there. So put a buy stop at that level right there. That's what and the time is alignment right there. Our target gonna be here. This buy sell liquidity target gonna buy sell liquidity at the Q3. Let's see how that's play out. Do we have Q3 10 reset? Here's another beautiful things right here. Okay, so if right here we see that it's the first test of this. You can say first or it can be second. If we count right here is a test, but let's count this is a real test right here. Is the first test. If we miss this entry, then we still have a second opportunity to enter. You see, it retests again after it rate this buy side of liquidity. I think it's the most critical right here. We have to understand, don't short them. Right here we have to go long. because it's a balanced break range, and you have a second test right here. So it's gonna be exploding. It's gonna take out this quarter tree bicyclicity right there. You see, it favorite gap balance break range retest twice, so it's a long set, and the entry time is 12:15. If we miss entry at 11, then an hour and 50 minutes later we have a re-entry or second entry right here. And we put a buy stop the same buy stop at the same level we go. But if we like to scalping, then we can go long right here, buy stop and hit this target right here. We get out and wait for a test, then we enter one more time, and that this time we let it run. And that's another strategy right there for, you know, for very high experience trader. I think they can do that, but right now we can. In the hand side we can see that, but in the real time we don't have the psychological, you know, capability to do that, because it requires a lot of mental, you know, mental experience right there, or mental skill or psychological skill right there. We don't have it right now. We try to build up right there right now. So that's the second entry, and so far we see a lot of this setup. If you see the balance break range retest twice, then you could see that it's gonna rate all the buy side liquidity that were built up or were trapped right there, and vice versa. Vice versa, that means that if it the upside, then it's gonna rate all the buy side liquidity. In this case, the downside, so it trapped lots of buy side. And if we look at the 1 hour time frame, we can see that's how this candle, right? As soon as this candle closed, it opened, it did retest below this level. However, you see that it respects this bullish breaker. It retests the body of that, but it's open above. It open above and it retests, then boom, it rally up. So that is the setup that we're looking for right there. Wait for the fellow gap down, up, wait for a test one, and take a short scalping, you know, short trade right here, or scalping trade right here, and then right here, this is the trade that we're gonna hold, which is going on the second test. All right, what else we have? Second test. And okay, and let's see. So let we get this out of the way. Yeah, right here. If we target the next breakout level, we got it. If we target the weekly, we also get it at that level. And if we target at this level, right, breakout level, we also got it. And if final one, we target the buy side liquidity, right, buy side liquidity of the quarter tree, we also get it at, you know, 15:45 right there. One more thing we want to point out right here. All right, we remember early on we say that we look at this model, which is the Judah swing at 130. All right, we try to see that if it happened today, we almost short them right here. You see, it looked like a Judah swing, and we short right here. We wait for it to rate at the long time, which is at this level. We thought that we were going to short right here, but it did not happen. It's just a manipulation before the second leg up right there, the last leg up. So we have to be careful. So look like if it's not a really swing, because swing it really go, this is not really swing at all. It kind of steady, but if swing, you see a huge manipulation to rate the long time. In this case, we don't see that. And also we look on the high time frame, we see that it's already finished its second leg down, so there's no reason for it to go to rate the sell side liquidity, because right now at this point more buy side liquidity than the sell side. That's why it's gonna go up instead of go down. So understand the draw on liquidity is the key where it's gonna head into. So that's an idea right there. Okay, so let's document this setup so we can see exactly it rate this buy side liquidity. So if we let it run right here, right, let's do a last documentation for the trade setup, and we're gonna get out of here. So basically we're gonna get in at here 1220, and we're gonna reach how much we're gonna reach here. That the level we're gonna reach. So $2.92 right there. Let's put it on the right side so we have more space, and let's copy that. We're gonna hit what? We're gonna target right here. This buy side liquidity, click for Q3. Q3 is one of the most critical because it's include 930 open right there, and that's where the DR model is established right there at 1030, from 9 to 1030. Okay, so basically we have risk reward ratio very beautiful. So it's 1 to 6 risk reward ratio right there. So basically right here, yep. So what we say is that, hold on. Okay. What we say that we anticipate, what is this one? Okay. So we anticipate on the high time frame, 1 hour time frame, the manager move already complete. It already finished. So we gonna anticipate a reversal. Right, we anticipate a reversal. That's the whole idea right there. Reversal. And 14, so we're going right here at 12, around 12 right there. And we let this candle form, and we see this feather gap from the breakout right there. It formed. It looked like rejection, but it just, a manipulation right there, and then boom. It's basically right here. We have, so right here we're gonna say high time frame, just X1. So the measure move is complete. So a reversal, or you can pull back right there, is expected. So that's which way we go along. The problem for us is when we need to go along, when we actually teach to go along right there. So let's, yeah, the time is alignment, you know, right there we see setup. So that's give an idea right there. You see the feather gap down, and you see also the feather gap up right there, balance break, you know, right there. But before that, we also have a balance break range right there. So we document this, which in this case is the trend reversal, right? Or is a full breakout in this case. Early on, we have right here the bearish breaker, feather gap retest, so it's a real breakout, but this one is full breakout, which is a balance break range retest twice. That's the idea right there. And we would buy stop. In this case, it's not at 9:30, so the volatility is very low, so it's easy for it to execute a buy stop order at 241.75. It will carry it into the trade right away. Entry time gonna be 12:20, and the risk reward gonna be 126. Beautiful right there. You have everything right there. High time frame, low time frame, the equivalent right there. Yeah, so this setup is a real, no, full breakout, balance break range retest twice, and entry is 25 or 12.20 right there. That's a beautiful setup. All right, I think that's it for today. We try. Thank you for your time and interest. We are really grateful for the opportunities, and we do what we love. The success is, you know, coming our way for sure. But for now, and have a great evening.